Hello students, admission of a partner lecture 7. In present video, I am going to explain about 8th problem from admission of a partner topic. I am taking this problem from Telangana State Telugu Academy Inter Second Year Accountancy Textbook. But this video is useful to all commerce students who want to know about admission of a partner topic. First 6 lectures videos links I am providing in the description box. Even present problem question also available in the description box. Let us see the question first. Ganga and Yamuna are partners sharing profits and losses in the ratio of 3:2. 3:2 is the old ratio. 3 number belongs to Ganga, 2 number belongs to Yamuna. So 3/5 is Ganga's share, 2/5 is Yamuna's share. How 5 came? 3 plus 2 is equal to 5. 3:2 respectively. Their balance sheet as on 31st March 2020 was as under. This is old balance sheet. See the liability side. Trade creditors 20,000 rupees. Bills payable 10,000 rupees. Outstanding rent 5,000. General reserve 25,000. Capitals of Ganga and Yamuna are 60,000 and 40,000 rupees. Asset side. Cash 12,000 rupees. Debtors 38,000 rupees. Stock 25,000 rupees. Furniture 40,000 rupees. Land and buildings 45,000 rupees. Two sets totals are 1,60,000 rupees. Come to additional information. On the above date, they decided to admit Saraswati for 2/9 share in profits of the business. So, admit. By seeing this word, we should understand that this is admission related problem. Here, Ganga and Yamuna are known as old partners and Saraswati is known as new partner. The conditions of admission are A. Saraswati should bring 50,000 as capital and 20,000 as goodwill. B. Land and buildings be appreciated by 20%. C. Furniture be depreciated by 5% and stock by 10%. D. There is an unrecorded investments valued at 3,000 rupees to be brought into books. E. Goodwill will be retained in the business. New profit sharing of Ganga, Yamuna and Saraswati is 4:3:2. Give journal entries, ledger accounts and balance sheet of Ganga, Yamuna and Saraswati. He is asking us to prepare journal, ledger and new balance sheet. But we don't prepare journal in this problem because in public examinations 99% without preparing journal entries only we have to do this problem. Therefore we practice that. If you want to know the journal entries for this type of problems, you can see my previous videos. We prepare ledger. In ledger we have to prepare revaluation account, capital accounts of Ganga, Yamuna and Saraswati. Next, cash account we have to prepare because in old balance sheet under asset side, cash balance is given and bank balance is not given. So cash account we have to prepare in this problem. After cash account, goodwill account we should prepare. Ledger contains all these accounts. After that we prepare new balance sheet. Let us start with the first account in ledger, that is revaluation account. In ledger, first we have to prepare revaluation account. This is revaluation account. It is a nominal account. Nominal account rule: debit all expenses and losses, credit all incomes and gains, profits. When loss comes in revaluation of assets and liabilities, if asset value is reducing or liability value is increasing, it is a loss. When profit comes in revaluation of assets and liabilities, if asset value is increasing or liability value is decreasing, then it is a profit. B, C, D. These 3 points are related with revaluation account. See the B bit? Land and buildings be appreciated by 20%. In old balance sheet, land and building value is given as 45,000 rupees. In old balance sheet, land and building value is given as 45,000 rupees. In revaluation of this asset, old partners came to know that market value of this land and building is increased by 20%. Land and building is an asset. Asset value is increasing. It is a profit. It should be credited to revaluation account. Buy land and buildings. Land and buildings value 45,000. Old balance sheet value. And market value of this asset is increased by 20%. So it is 9,000 rupees. Next adjustment. Furniture be depreciated by 5%. In old balance sheet, furniture value is given as 40,000 rupees. In old balance sheet, furniture value is given as 40,000 rupees. In revaluation of this furniture, old partners came to know that market value of this furniture is reduced by 5%. Furniture is an asset. Asset value is reduced. It is a loss. It should be debited to revaluation account. To furniture. Book value of furniture 40,000. 5% of this value is reduced. 2,000 rupees. Next adjustment. Stock should be depreciated by 10%. In old balance sheet, stock value is given as 25,000 rupees. In old balance sheet, stock value is given as 25,000 rupees. Market value of this stock is reduced by 10%. Stock is an asset. Asset value is reducing. It is a loss. In revaluation account debit side, to stock 25,000 is the book value and market value of this asset is reduced by 10%. 2,500 is the loss. Next, there is an unrecorded investments valued at 3,000 rupees to be brought into books. See the old balance sheet asset side, investment value is not given. That only is giving in the adjustment. Unrecorded investments. They purchased investments worth 3,000 rupees, but they have not recorded these investments value in old balance sheet under asset side. Old partners purchased investments with 3,000 rupees. Investments means they invested their money in outside companies' shares or debentures or in government bonds. These investments is to be shown as an asset in old balance sheet. But if you observe the asset side of old balance sheet, there were no investments. Means they have not recorded investments value in old balance sheet. In revaluation of assets and liabilities, old partners came to know that they have not recorded investments worth 3,000 rupees in the books. Now they want to record. Investments old value is 0. Book value of investment is 0. Because in old balance sheet we are not written any value for investment. Now they want to record 3,000 worth investments. So asset value is increased by 3,000 rupees. Investment is an asset. Its value is increased by 3,000. Because old value 0, now you want to write 3,000 rupees in the books. Means value is increased by 3,000 only. When asset value increases, it is a profit. It should be credited to revaluation account. Buy investments account. No need to show any calculations. Directly this 3,000 we have to write in the amount column. Revaluation account related, all adjustments are completed. Now finally, we have to find out the profit or loss in revaluation of assets and liabilities. Observe, credit amount column total is more. In rough notes, put the total minus debit total. Difference is 7,500. Credit side we wrote profit. Debit side we wrote loss. Profit is more by 7,500. Finally, in revaluation of assets and liabilities, there is a profit of 7,500. It should be transferred to old partners' capital accounts in old profit and loss ratio. Recollect the question? Old profit and loss ratio of Ganga and Yamuna is 3:2. 3/5 of profit goes to Ganga and 2/5 of profit we should transfer to Yamuna. So debit side we have to show this transfer because debit total is less than credit total. To Ganga capital account to Yamuna capital account. Revaluation profit is 7,500. In this, 3/5 we should transfer to first partner, 2/5 we should transfer to second partner. 1,500 into 3, 4,500. 1,500 into 2, 3,000 rupees. So in total profit 7,500, 4,500 we should transfer to Ganga's capital, 3,000 rupees we should transfer to Yamuna's capital. Now two sides put the totals. Suppose you are writing journal entries for this problem. First entry is revaluation account data to furniture account to stock account. Second entry is land and building account data, investments account data to revaluation account. Third entry is revaluation account data to Ganga capital to Yamuna capital. So related with revaluation account, 3 entries you have to pass in journal. So revaluation account is completed. Next we have to prepare capital accounts of all the 3 partners. Capital accounts of Ganga, Yamuna and Saraswati. To prepare capital accounts, 2 methods are there. One is by using the journal entries we can prepare capital accounts. But in this problem we are not writing journal entries. Therefore, second method we follow. That is based on hints we prepare capital accounts. What are those hints? Capital account is a personal account. Personal account rule: debit the receiver, credit the giver. Means if partner is receiving any benefit from the firm, we should record the transaction on debit side. If partner is giving any benefit to the firm, that transaction credit side we have to record. In other words, if partner is a receiver, debit side we should write no. Suppose that partner is retiring, then partner should return that amount to firm. So the amounts which partner should return to the firm at the time of his retirement should be debited. Credit the giver. Credit amounts are what? Partner has given to us, to the firm. If partner is retiring, firm should return that amount to partner. So the amounts which firm has to return to partner at the time of his retirement, we should show on credit side. By using these hints, we are going to prepare capital accounts. We have to start capital accounts with opening balances. From where we have to take these opening balance amounts? In old balance sheet under liability side, capitals of Ganga and Yamuna are given now 60,000 rupees and 40,000 rupees. These 2 amounts you have to write here. Write down on credit side, by balance brought down 60,000 rupees and 40,000 rupees. New partner's amount is not given in old balance sheet now. Therefore, for Saraswati, don't write anything. Why I am showing opening balance on credit side? Because capital is a liability. Liability shows a credit balance. Therefore, credit side I am writing. Otherwise, you know this hint now. Partners brought 60,000, 40,000 capitals into the firm. Suppose these partners are retiring, then firm should pay these amounts to partners. Therefore, opening balances are appearing on credit side of capital accounts. After writing opening balance, next we should write revaluation profit or loss. In this problem, in revaluation of assets and liabilities, we got profit. That profit we transferred to old partners capital accounts now. That amount we should show in capital accounts. Which side? Suppose partner is retiring, then firm should pay his share of revaluation profit to him. So at the time of retirement, firm should pay revaluation profit share to the partner. Therefore, credit side it appears. What to write in particulars column? By revaluation account. In revaluation account, we calculated 4,500 and 3,000. After revaluation account, we have to observe the old balance sheet liability side. Any accumulated profit is given or not. In old balance sheet under liability side, we have general reserve 25,000 rupees. This is called accumulated profit. This amount we should transfer to old partners' capital accounts in old profit and loss ratio. General reserve amount 25,000 rupees. In which ratio we have to distribute this amount to old partners? In old profit and loss ratio. Old profit and loss ratio is 3:2. Therefore, for Ganga 3/5, for Yamuna 2/5. These are the shares. So 3/5 of 25,000 rupees we should transfer to Ganga's capital account. 5,000 into 3, 15,000 rupees. That is Ganga's amount. If Ganga is retiring, then firm should pay that amount to Ganga. So credit side it appears. By general reserve account 15,000 rupees. For second partner you need not to calculate. From 25,000 if you deduct 15,000, remaining 10,000 is second partner's amount only. If you want to calculate 25,000 into 2/5 you have to do. Next come to capital and goodwill related adjustment. EBIT and DBIT. These two are related with capital and goodwill. See the EBIT. Saraswati should bring 50,000 rupees as capital and 20,000 rupees as goodwill. EBIT. Goodwill be retained in the business. New partner Saraswati is bringing 50,000 rupees capital and 20,000 rupees goodwill into the firm at the time of admission. To adjust goodwill, there are three methods now: premium method, revaluation method, memorandum revaluation method. When new partner is bringing capital and goodwill both, it is premium method. So here, under premium method, we have to adjust the goodwill. In premium method, we have three sub methods: goodwill paid privately, goodwill retained in the business, goodwill withdrawn by the old partners. In question, goodwill should be paid privately by the new partner. That sentence is not given. So it is not premium A. And he has not given that old partner should withdraw the goodwill amount. So this is not premium C. And clearly he mentioned that goodwill should be retained in the business. So under premium B bit, we have to adjust the goodwill. When new partner is coming, she is bringing capital and goodwill now. We have to observe the old balance sheet asset side. Cash balance is given, bank balance is not given. Then our assumption is this capital amount and goodwill amount. These two are coming from new partner to our firm. Directly cash is coming into our firm. For bringing capital and goodwill, we have to write the first entry now. While writing that entry, cash account, we should take as one account. Don't take bank account. Because in old balance sheet asset side, bank balance is not there, cash balance is there. Our assumption is she brought these two amounts directly into our firm. Cash is coming. Therefore, cash account is one account. And Saraswati is bringing this money. Therefore, second account is Saraswati account. Cash account. Cash is a real account because cash is an asset. Saraswati account is a personal account. Real account rule, debit what comes in, credit what goes out. Cash is coming, therefore we should debit. Personal account rule, debit the receiver, credit the giver. She is giving money, no, she is a giver, we should credit. We should not write owner's name in the books. Saraswati is a partner, means she is a owner. Owner's name we should not record in the books. Instead of owner's name, write down capital word. But as three partners are there, prefix partner's name also for more clarity. So which account we should credit? Saraswati capital account. Then the first entry is cash account debtor to Saraswati capital account. Cash account debtor to Saraswati capital account. Even goodwill account also we have to credit. Because Saraswati is bringing not only capital, even goodwill also. Why goodwill account we are crediting? Because Saraswati is bringing goodwill as a compensation to old partners. So firm should pay this goodwill amount to old partners. By transferring to their capital accounts, firm pays that amount. So to the firm, this goodwill is a liability. In firm's books only we are writing these accounts now. So from firm's point of view, you have to think. To the firm it is a liability. Liability shows a credit balance. Therefore, we have to credit goodwill account. Next entry. This goodwill firm has to transfer to old partners' capital accounts. When we transfer this goodwill amount, now in goodwill account there is no balance. Once we credited goodwill account with 20,000, when you transfer 20,000 worth goodwill to old partners' capital accounts, goodwill account should get closed. How to close the goodwill account? As once we credited goodwill account with 20,000, again if you debit goodwill account with 20,000, then goodwill account will get closed. So to close the goodwill account, we are debiting goodwill account here. And why capital accounts are credited? Because this goodwill amount we are adding to partners' capital. Partners' capital amounts are liability to the firm because in future firm has to pay that amount. Even this goodwill amount also firm has to pay to them. So their liability is increasing. Capital is a liability. Liability shows a credit balance. And you want to increase the liability further. Therefore, again you are crediting capital accounts. Now, this goodwill amount in which ratio we have to distribute to old partners? In sacrificing ratio. Because goodwill concept is what? When new partner is coming, old partners are losing some share of their profits to new partner. For this sacrification, they demand some compensation from new partner. That compensation amount is called goodwill. So in which ratio they are sacrificing their profits? In that ratio, they should take the goodwill amount now. Therefore, goodwill is to be transferred to old partners' capital accounts in sacrificing ratio. Regarding sacrificing ratio, remember these points. In question, if new profit and loss ratio is not given, then sacrificing ratio, old ratio, both will be the same. In our problem, old ratio is 3:2 now. Sacrificing ratio should be taken as 3:2. In question, if new ratio is given, then we should calculate sacrificing ratio by using one formula. That is old profit and loss ratio minus new profit and loss ratio. In present problem, new profit and loss ratio is given in the question. New ratio is 4:3:2. As new ratio is available in the question, we should not think that old ratio, sacrificing ratio both are same. So goodwill should be distributed as per 3:2. New ratio is given in the question now. Therefore, we have to calculate sacrificing ratio separately. Where you have to calculate? It is not a rough notes. It is part of the problem. As a working notes, you have to show that. You can show that working notes below the capital accounts, otherwise in starting. So, we start the problem with the revaluation account now. Before to that, you can show this calculation. Sacrificing ratio we have to calculate first. Below to that, ledger, all accounts you have to prepare. Finally, new balance sheet. Otherwise, below the new balance sheet also you can calculate sacrificing ratio. So in any place you can calculate it. But as a part of solution, clearly you have to show this sacrificing ratio calculation. Don't do that in rough place. Let us see how to calculate sacrificing ratio. Old profit and loss ratio of Ganga and Yamuna is 3:2. New profit and loss ratio of Ganga, Yamuna and Saraswati is 4:3:2. Here, Ganga's share is 4/9. Add these three numbers, 9 comes. Yamuna's share is 3/9. Saraswati's share is 2/9. Now, you know the formula for sacrificing ratio. Old ratio minus new ratio. So the logic behind this formula is very simple. Instead of taking fractions, if you take amounts, easily we'll understand this concept. Assume that Ganga has 10 rupees with her. Yamuna has 8 rupees with her. Saraswati is admitted as a new partner. Ganga and Yamuna, they have given some amounts to Saraswati. From 10 rupees, Ganga sacrificed some amount. From 8 rupees, Yamuna sacrificed some amount. Now, after this admission, Ganga has 7 rupees with her. Yamuna has 6 rupees with her. And Saraswati has 5 rupees with her. Now the question is, how much amount Ganga sacrificed towards Saraswati? So before her admission, Ganga's amount is 10 rupees. After Saraswati's admission, Ganga's amount is 7 rupees. So how much amount Ganga sacrificed? 10 rupees minus 7 rupees, 3 rupees. How much amount Yamuna sacrificed? Before admission of Saraswati, Yamuna's amount is 8 rupees, and after her admission, Yamuna is having 6 rupees with her. So how much amount Yamuna sacrificed to Saraswati? 2 rupees. So what we are doing here? Old amount minus new amount. If we do, then the amounts which they are sacrificing towards a new partner are coming. Same concept we are applying in case of fraction also. So old ratio minus new ratio. If we do, sacrificing ratio comes. So let us calculate the sacrificing ratio of X and Y. So sacrificing share of Ganga. Ganga's old share is 3 by 5 minus Ganga's new share is 4 by 9. For 5 and 9, we have to find out the LCM now. We cannot divide these two numbers with any one number. Therefore, multiply these two. LCM is 45. 5 9s are 45. 9 into 3, 27. Minus 9 5s are 45. 5 into 4, 20 is equal to 7 by 45. So sacrificing share of Ganga is 7 by 45. Same thing we have to apply for Yamuna also. So Yamuna. Apply the same formula. Yamuna's old ratio is 2 by 5 minus her new share is 3 by 9. LCM 45. 5 9s are 45. 9 into 2, 18. Minus 9 5s are 45. 5 into 3, 15. 3 by 45. So, Yamuna's sacrificing share is 3 by 45. Now, finally write down the sacrificing ratio. Remember, to write the sacrificing ratio, only these numerators we have to consider. Don't consider the denominators. Therefore, sacrificing ratio of Ganga and Yamuna is 7:3. And sacrificing share of Ganga is not 7 by 45. Consider this ratio. 7 by, add these two numbers, 10. Similarly, sacrificing share of Yamuna is not 3 by 45 now. 3 by, add these two numbers, 10. So, in 7:3 ratio, we should distribute the goodwill to old partners' capital accounts. In public examination, sacrificing ratio calculation, he may ask for 2 marks also. In question, he gives old ratio and new ratio, and he asks us to calculate sacrificing ratio. Sacrificing ratio is 7:3. So not in old ratio, in sacrificing ratio, this 20,000 we have to transfer to old partners' capital accounts. For Ganga, 20,000 into 7 by, add these two numbers, 10. For Yamuna, 20,000 into 3 by, add these two numbers, 10. So amounts are 14,000 rupees and 6,000 rupees. In total goodwill, 20,000. To Ganga's capital, we have to transfer 14,000 rupees. To Yamuna's capital, we have to transfer 6,000 rupees. Now, these two goodwill entries we will post in capital accounts. See the first entry, goodwill account is credited. So credit side we have to post. What to write in particulars column? By cash account, debit account name. But don't write cash amount 70,000. In Saraswati capital we are posting this entry now. Therefore Saraswati capital amount 50,000 rupees. Write in Saraswati's column. Come to second entry, capital accounts are credited. Therefore, this entry also credit side only we should post. What to write? Debit side account name by goodwill account 14,000, 6,000. Posting is completed. Next step is balancing. Debit side we don't have any amounts now. So find out the totals of credit columns. Same amounts appear as balance carried down. Put the totals. In new balance sheet under liability side, we have to show these three amounts as capitals of these three partners. Capital accounts completed. Next we have to prepare cash account or bank account. Now the doubt is which account we should prepare, cash account or bank account? In old balance sheet under asset side he is giving cash balance now 12,000 rupees and bank balance is not there. Therefore cash account we have to prepare in this problem. We have to start this cash account with opening balance. From where we should take this amount? In old balance sheet under asset side, cash balance 12,000 is given now. This amount we should show here. Debit side, to balance brought down 12,000 rupees. Why debit side I am taking this amount? Because cash is an asset. Asset shows a debit balance. Therefore, opening balance debit side we should write. In first entry, cash account we wrote. So this first entry we have to post in cash account. As cash account is debited in the entry, on debit side we have to post this entry. What to write in particulars column? Other side, credit side, account names we should write. To Saraswati capital account, to goodwill account. Amounts 50,000, 20,000. Credit side no amounts are there. Therefore, debit total first you have to write. Same amount appears as balance carried down. Put the total. So cash account is completed. In new balance sheet under asset side, as cash balance you have to show this amount 82,000 rupees. After cash account, we have to prepare goodwill account. This is goodwill account. First we have to observe the old balance sheet under asset side, whether any goodwill is given or not. In old balance sheet under asset side, there is no goodwill amount. As there is no goodwill in old balance sheet, directly we have to post these two entries in goodwill account. See the first entry, goodwill account is credited. Therefore, this first entry, credit side we have to post. What to write in particulars column? Other side, debit side, we wrote cash account now, write down that. By cash account. But don't write cash amount 70,000 rupees. We are preparing goodwill account now. Goodwill amount 20,000 we should write. Come to second entry. Goodwill account is debited. So debit side we have to post this entry. What to write? Credit accounts names. To Ganga capital account. To Yamuna capital account. These two amounts. 14,000, 6,000. Two sides put the totals. Goodwill account is closed. There is no balance carried down in goodwill account because in first entry we credited goodwill account with 20,000 rupees. In second entry we debited goodwill account with the same amount. So any account with the same amount, once you credit and again if you debit, then that account will get closed. We have closed this goodwill account by transferring the balance in goodwill account to old partners capital accounts. So remember, under premium method PBIT, goodwill account should get closed like this. You should not get any balance carried down in goodwill account. As there is no balance carried down in goodwill account, in new balance sheet under asset side, we should not show goodwill amount. With this, ledger is completed. In ledger, we prepared revaluation account, capital accounts, cash account, and goodwill account. Finally, we have to prepare the balance sheet of all the three partners. New balance sheet we have to prepare. Ledger is completed. Next, we have to prepare new balance sheet. Balance sheet of Ganga, Yamuna and Saraswati as on 31st March 2020. As a new partner's name also we are adding. This is new balance sheet. Based on this old balance sheet and additional information, we have to prepare new balance sheet. See the liability side. Trade creditors 20,000 rupees. And related to creditors, there is no additional information. Therefore, creditors amount 20,000. We should take in new balance sheet under asset side also. Trade creditors. As there is no adjustment, 20,000 old balance sheet value, we have to write a new balance sheet also. Next, bills payable 10,000 rupees. Related to bills payable, there is no additional information. Therefore, same amount 10,000 appears in new balance sheet under liability side also. Bills payable, no adjustment. So, old balance sheet value 10,000, we have to write in new balance sheet also. Next, outstanding rent 5,000 rupees. Related to this, there is no additional information. Therefore, same amount 5,000 we should show in new balance sheet also under liability side. Outstanding rent, no adjustment. So, old balance sheet value 5,000 rupees we have to show here also. Next, come to general reserve 25,000 rupees. This accumulated profit we transferred to old partners capital accounts now. Therefore, now there is no balance in general reserve account. As general reserve account is closed, in new balance sheet we should not show this amount again. So liabilities we have completed. Not only from this balance sheet, we should see the additional information also, whether any additional liability is given or not. There is no additional liability. Therefore, come to capitals. Don't show these capitals amounts. Ganga and Yamuna 60 and 40,000 rupees. Which amounts we have to show here? In capital accounts, we got answers to balance carried down amounts. These three amounts we have to show here. You can show these three amounts in inner column. Total you can write in outer column. Otherwise, directly in outer column you can show these three values. So liability side completed. Next come to asset side. First one, cash. Don't show this 12,000 rupees in new balance sheet. Which amount we have to show here? In cash account we got answer now 82,000 rupees. This amount we have to show here. Cash 82,000 rupees. Next come to debtors 38,000 rupees. Related to debtors, there is no additional information. Provision for bad debt is not given. Therefore, same amount 38,000 we should show in new balance sheet under asset side also. Debtors, there is no adjustment. Therefore, old balance sheet value 38,000 you have to write in new balance sheet also. Next, stock 25,000 rupees. Related to stock, there is one adjustment. We have to provide depreciation on stock at the rate of 10%. Stock. In old balance sheet, stock value is given as 25,000 rupees. And in adjustments, he is giving that at the time of revaluation of this stock, old partners decided to reduce 10% of its value. So market value of stock is 10% less than the book value. Therefore, book value you have to show in inner column 25,000 minus depreciation. In revaluation account we have calculated 2,500. Remaining amount in outer column. Market value of stock is 22,500 rupees. Next come to furniture 40,000 rupees. Related to furniture, see the adjustment number C. Furniture be depreciated by 5%. Furniture book value is 40,000. Old balance sheet value is 40,000. And market value is reduced by 5%. So 5% of 40,000. 2,000 is reduced. Therefore, market value of furniture is 38,000 rupees. In inner column, show the old balance sheet value, book value 40,000 minus depreciation. In revaluation account we have calculated 5% of 40,000 is 2,000 rupees. Now market value of furniture is 38,000 rupees. Show that in outer column. Next, land and buildings 45,000 rupees. Related to land and buildings, adjustment number B. Land and buildings B appreciated by 20%. Land and buildings book value is 45,000 rupees. And in revaluation of this asset, old partners came to know that market value is increased by 20%. So, in inner column, show the book value, old balance sheet value 45,000, increased no market price, decreased means depreciation we should deduct, increase means appreciation we should add, plus appreciation. In revaluation account we calculated appreciation on land and building is 9,000 rupees. In outer column 54,000. Market value of land and building is 54,000 rupees. So balance sheet asset side completed. Not only that, we have to observe the additional information also, whether any extra asset is given or not. Yes, debit. There is an unrecorded investments valued at 3,000 rupees to be brought into books. Old partners Ganga and Yamuna invested 3,000 rupees in some outside business. Suppose they purchased outside companies shares or debentures, or they invested this 3,000 rupees in government bonds. Investment is an asset to us. Asset value 3,000 rupees we have to show under asset side of balance sheet, no? But in question, in old balance sheet asset side, there is no investment value. Means they invested 3,000 in outside companies, but they forgot to record that in the books. Means old value of investment is 0. Book value of investment is 0. In revaluation of assets and liabilities, old partners came to know about this. Now they want to record that investments in the books. Investment is an asset, its old value is 0. Now if you record, then 3,000 you are going to record, means investments value is increased by 3,000 rupees. So market value of investment is 3,000. In revaluation account, as a profit we wrote 3,000 rupees because investment asset value is increased by 3,000 and market value of investment is also 3,000. Therefore, same 3,000 appears in new balance sheet under asset side also. Investments 3,000 rupees. So all assets and liabilities we have taken in new balance sheet. And goodwill doesn't come in new balance sheet because this is premium method B. New partner brought goodwill in the business, that goodwill is retained in the business. In this method, goodwill account is closed. There is no balance carried down in goodwill account now. Therefore, we should not show goodwill amount in new balance sheet under asset side. Finally, put the totals on two sides. Liability side total is 2,37,500 rupees. Asset side also find out the total. So two sides totals are same. Thus, in balance sheet, two sides you have to get the same total. Then only a problem is correct. So this is all about 8th problem from admission of a partner topic. Hope this video is helpful to you. Thank you.